What you see revealing right in front of your eyes is 42 stacked 400 troy ounce gold bullion bars. That's just over a half metric ton of gold bullion. Now, after having added a net positive 55 metric tons of official gold bullion last July 2023, reports have come in of more steady central bank gold bullion buying last month, August 2023. Poland bought more for the fifth month in a row, bringing their net official gold bullion buying to 88 metric tons thus far in 2023. China bought last month as well. That's the 10th month in a row of their official gold bullion buying spree, buying since November of last year, 2022, a running addition of 217 metric tons to their now underreported official gold holdings of 2,165 metric tons. Of course, it's quite likely, judging from physical gold bullion flow data and gold mining records over the last 4 decades or so, that the Chinese Sovereign Wealth Fund and the Chinese Army also likely have vast holdings of gold that have yet to be declared officially so. So when we look at the world of physical gold in the year 2023, a few things remain glaringly apparent to anyone who bothers to look. Central banks are buying gold in record size and at all-time historic pace. Yet in this modern world that has so leveraged paper asset values over physical gold bullion values to the tune of never-before-seen historic leverage, modern investors, especially in the West, are gold illiterate by design. Western investors that is, they own next to no gold bullion. Yet the self-titled, supposed global gold industry spokesman's body, the World Gold Council, founded in 1987, the same year the Bank of England founded the London Bullion Market Association, or LBMA, well, the WGC is spending loads of marketing capital to give their potential gold illiterate viewers a fractal story of the modern day gold market saga. Have a look at the trailer.
I'm on a journey to discover the human story of gold, how it shapes us.
We're going down!
And our world. It's a story I thought I knew.
Oh my God!
Turns out, it's far more incredible
That takes your breath away.
than I ever imagined.
Hiring a well-paid famous actor to go around the world and gawk at the size and scale of the modern-day gold market is unlikely to tell the sordid story of what has happened to modern-day gold price discovery under full fiat financialization run amok 1980s onwards. To dare cover a shred of that ongoing story, we can at least look at a few data points and facts right here, right now. In 1987, both the WGC and LBMA were founded, the latter by the Bank of England, and surely the former World Gold Council was not coincidental in its being founded in that very same year. Since then, the world has increasingly seen a massive price discrepancy building in day-to-day intra-day gold price action, where generally the price of gold goes up during Eastern trading hours, and the price of gold gets consistently smashed during Western trading hours. Recall back to the early 2010s when the commercial gold and silver London price fixing banks got sued for manipulating price discovery on a consistent basis. Well, many of them were fined, and I would allege where there's smoke, there was certainly fire. Well, we look back at this chart. Today, the Eastern outside London AM and PM price fixed trading hours, that price has now ballooned beyond 28,000 per troy ounce, where of course the ongoing spot price, the red line here, which is heavily influenced by outside Western derivative trading, it's still grappling to clear the 2,000 an ounce price threshold for a long-term hopeful price support and eventual move higher for gold. It was just over 1 year ago when former London gold and precious metals market trader Peter Hambro admitted in a publicly published article and editorial that the gold price has been rigged since the 1980s. We did a 15-minute video on our SD Bullion channel here covering that story. Of course, you can go look that up for yourself here on YouTube, but I'll leave a backlink in the show notes below. But we can simply go back and look from his own words. What a clown show modern-day gold price discovery has truly become. Peter Hambro on July 4, 2022, in an article entitled, "Don't Forget the Golden Rule, Whoever Has the Gold Makes the Rules." He wrote, quote, "Disinformation for many years has kept a lid on this tinderbox, and since 2018, the financial stability desks at the world's central banks have followed the Bank of International Settlements' instruction to hide the perception of inflation by rigging the gold market. Of course, they cannot be seen to do this, and they need cover. The only way to achieve the cover is by smashing the price of physical gold by the alchemical production of, quote, paper gold. With the help of the futures market and the connivance of the alchemists, the bullion traders, yes, that included me, I was deputy managing director of Makota and Goldsmith, managed to create an unshakable perception that ounces of gold credited to an account with a bank or bullion dealer were the same as the real thing. Quote, and much easier, old chap, you don't have to store or insure it. Once investors swallowed this stupefying pill, it was easy to sell them gold that simply didn't exist. Of course, there were wary investors who found it hard to believe the likes of Makota, Matungo, Rothschild, Sharps-Pixley were undoubted counterparties and wanted to be assured that the gold would be there when they called for it. Easy, we said. Don't bother paying for it. Just give us an initial cash margin and agree to a variation margin, and our paper promise is as good as gold. This was the simple derivative. If you thought the price would go down, you could sell us gold you didn't have and margin the trade in the same way. Then along came a raft of options and other products, and the derivative market, for that is what the Chimera was called, started to spiral like a tornado. To make the bogus gold look even safer, the Bank of England was quietly willing to lend the gold market members physical gold in the event that things got a bit tricky and vaults were empty. When one of the members were bust, the others clubbed together, and with the Bank of England holding the ropes, the customers were bailed out, but I didn't get a bonus that year. And this pseudo-confidence suited the brilliant theoretical economists. We, the government, we, the central bank, we, the BIS, can print the margin. That is what fiat currency is, and not unlike Bitcoin, easier to mine. Derivatives are unmargined and thus have no limit and may not even be on the balance sheet. The great banks of Wall Street will accept our fiat dollars as margin and manufacture gold to swap the market. Gentlefolk, look at this chart above in this article and see your bullion trading counterparty and buy some physical gold. Then ask for your gold or silver or platinum or palladium or any other physical store of value and medium exchange that you have acquired to protect you from the ravagings of inflation. For inflation will surely engulf the world when the paper gold emperor's clothes are seen for what they are. So yes, famed actor for hire, Idris Elba. That's a mere sliver of the damning body of ongoing data and circumstantial evidence of what the modern-day gold market has devolved into. A world where Western derivative traders, with the implicit okay of the powerful Western central banks that oversee them, manipulated and systemically suppressed gold values for decades compounding, in order to hide ongoing rampant price inflation, all while often criminal traders in the precious metals markets were happy to rip off unknowing stakeholders like emerging market miners and other shareholders in the gold market supply chain for that matter. I'm willing to bet your coming WGC gold documentary will be more like a childlike cartoon. You won't dare to try to choke down some of these ongoing spicy facts regarding the current day canard of modern day gold price discovery. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce Silver Eagle coin giveaway.
Want to win 500 Silver Eagle coins just like this guy?
Yeah, this is Kevin.
Hi, Kevin. This is Dr. Tyler Wall, CEO of SD Bullion. I'm calling to let you know that you won the SD Bullion giveaway of a monster box of 2022 Silver Eagles.
Unbelievable. That is awesome.
So click the link below for your chance to win.
Good luck to all of you out there who enter our free 500-ounce American Silver Eagle coin giveaway sweepstakes. The fiat US dollar, spot, silver, and gold price markets basically traded slightly up and sideways respectively on this holiday shortened week. The spot silver price closed just under 23 an ounce bid, while the spot gold price finished just under 1,920 an ounce bid for the week. The spot gold silver ratio fell slightly on silver's relative strength over gold. It closed at 83. While unsecured shareholders have been net selling gold proxies they don't actually own from gold ETFs, over the last more than 1 year on net, the spot gold price has remained relatively steady and strong, and of course that's thanks to the aforementioned record bullion buying, mostly by major Eastern nations and their central banks collectively, who are buying in record size of late. Meanwhile, the US government has aims to continue spending savings that we don't have, but often creating the spending out of thin air, producing eye-watering deficits at levels consistently not seen since the World War II era. Somehow, investors are supposed to be left to believe that these fiat financialized markets are healthy, safe havens to stay in. But don't look now. While we here in the US are turning Japanese, apparently Japan itself is going to front-run us again, preparing economic stimulus packages for next month, October 2023. Of course, we're going to blow away their lead once our inevitable return to infinite QE policies returns in full. Meanwhile, I hope you are doing like central banks are doing collectively around the world and acquiring your bullion positions while they still remain systemically suppressed and still relatively cheap. That's going to be all for this week's SD Bullion Market Update. As always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.